Welcome, everyone. Today, we're diving into a rigorous structural analysis of the Crypto Terminal Pro. I'm putting on my financial strategist hat today to evaluate exactly how this system extracts data, how it processes that data, and ultimately, if its methodology is actually reliable. Now, right off the bat, I need to make one thing absolutely clear. This explainer and the tool we're looking at are strictly for educational and technical analysis purposes. This is not financial advice, and it's certainly not an investment strategy. We're simply getting under the hood to audit the architecture of a high-performance quantitative system. Look at this quote right here. In high-frequency and volatile environments, data integrity is the most valuable asset. That core philosophy literally drives everything we're about to cover today. You see, raw data in the crypto market is incredibly vulnerable to noise. If the information feeding your analysis is lagging, if it's fragmented, or if it's easily manipulated by low liquidity, well, any strategy built on top of it is inevitably going to fail. Okay, let's dive into this. Here is our exact itinerary for today's audit. First up, the reliability challenge. Second, the hybrid extraction architecture. Third, technical variable auditing. Fourth, the multi-timeframe noise filter. And finally, we'll wrap up with the confluence verdict.
Section 1. The reliability challenge.
So, what's the fundamental problem with traditional technical analysis? In a word, overload. Information overload and the contradictory signals that come with it. Think about it. In a traditional setup, a trader might look at an RSI telling them a coin is oversold, but then their MACD indicator shows accelerating bearish momentum. These are contradictory signals. And what happens? It inevitably leads to emotional bias. You just end up cherry-picking the indicator that fits whatever pre-existing narrative you already have in your head. The terminal solution to this problem is pretty fascinating. It completely replaces that subjective guesswork with unified data flows, algorithmic synthesis, and 100% objective mathematical score.
Which brings us to Section 2, Hybrid Extraction Architecture.
To build a truly reliable system, we have to audit the foundation, right? Like, exactly where and how is this raw data being sourced? The terminal uses some very specific extraction points. For primary ingestion, it pulls directly from the Binance API to get real-time order flow, pricing, and the global long/short ratio from actual accounts. Then, it taps into the alternative.me API to quantify the fear and greed index, which acts as a fantastic contrarian sentiment gauge. But here is the really brilliant part. It integrates predictive oracles like Polymarket, Kalshi, and Manifold. This means, instead of relying on talking heads or analyst opinions, the system captures the market's implied probability from people who actually have real capital at risk. It's literally capturing a consensus of those with true skin in the game. By pulling from these diverse, top-tier sources, this hybrid extraction methodology guarantees critical uptime and practically eliminates vulnerability to external latency. And look, if you're a high-frequency strategist, you know that minimizing latency and ensuring your data flow doesn't just randomly drop out during a flash crash is just as critical as the data itself. No data, no trade.
Let's move right along to Section 3, Technical Variable Auditing.
Okay, now that we know the data foundation is solid and fast, let's look at how the system rigorously processes and verifies that info. The terminal actually integrates 18 distinct algorithmic modules. Let's methodically break down how they're grouped. You've got momentum and strength modules, like your RSI and the ultra-sensitive Stochh RSI, which measure market pressure and anticipate explosive moves. Then, price structure modules use tools like Supertrend and the Eldorado Index to dynamically map out support and gauge internal power. Next, Smart Volume tracks actual institutional money flow. And finally, the macro context modules evaluate global capital flows by auditing things like the dollar index and long-term cyclic indicators.
Now, what's really interesting about this slide is the Smart Volume module. Think of this as a very strict auditor. It constantly cross-references price action with sustained institutional money flow, using tools like the VWAP and on-balance volume. It is actively hunting for divergences. So, for example, if the price pumps to a new high, but the volume is actually marking a lower high, boom, the system immediately flags it as an illiquid trap, basically a fake breakout with zero real institutional backing.
This auditing process prevents one of the absolute most fatal mistakes in trading, operating purely on macro narratives. Usually, a trader sees a weak dollar and automatically thinks, hey, time to buy crypto, right? Well, the terminal actively audits that macro context against live institutional selling pressure. If global news is super positive, but the internal Smart Volume modules detect that institutional money is quietly distributing and selling off capital in the background, the system actively penalizes and filters out that positive macro noise.
Section 4, the Multi-Timeframe Noise Filter.
This is where the terminal brings in the concept of time frame reliability to stop you from overreacting to micro volatility. Let's walk through this exact algorithmic sequence. Step 1. The system detects a severe momentum drop on, say, the 1-hour time frame. Now, a traditional trader might panic and sell everything here. But step 2, the system instantly cross-references this drop against the structural trend on the much larger 1-week time frame. And step 3, if that 1-week trend is still highly positive, the algorithm categorizes that 1-hour drop as nothing more than temporary tactical noise. This multi-time frame architecture is a lifesaver. It fundamentally protects a strategist's macro view from everyday intraday panic. And speaking of the macro view, this timeframe filter also uses logarithmic cycles to map out long-term accumulation windows. By statistically projecting data from the past 4 Bitcoin halving cycles, the system mathematically calculates that historical market bottoms generally occur between 800 and 950 days after a halving event. To put that into perspective, that places the next projected macro accumulation bottom somewhere between June and November of 2026. This gives strategists a vital data-backed temporal map. Finally, Section 5, the Confluence Verdict. We've reached the ultimate culmination of the audit, where all these data flows, timeframes, and volume metrics are finally synthesized. 18. That is the magic number of algorithmic modules we've discussed today. And the absolute golden rule of this terminal is that none of these 18 modules are ever, and I mean ever, trusted in isolation. Trading blindly on a single MACD crossover or one oversold RSI is a mathematical trap, plain and simple. So, the crucial point is this. The confluence verdict is the central brain of the entire terminal. It mathematically synthesizes all 18 of those algorithmic modules into one single bias-free conclusion regarding market inertia. This is the absolute solution to the problem of contradictory market signals we talked about earlier. It forces total alignment between global context, institutional liquidity, and price action. All of that vast, multidimensional data we just audited is instantly condensed into this one single score, ranging from -100 to +100. A score of -100 means extreme bearish distribution. Literally all 18 modules agree the market is collapsing. On the flip side, a +100 represents extreme bullish accumulation. It completely replaces human gut instinct and guesswork with cold, calculated mathematical confluence. And that brings us to the end of our structural analysis. I want to leave you with this one provocative question to think about. In a market absolutely saturated with emotional noise, are you operating on isolated indicators or mathematical confluence? Thanks for joining me for this technical breakdown. Until next time, stay focused, stay objective, and keep learning.